everyone, it's Rob.
Hey, welcome back to the HUBB channel. Rob, what the?
I'm stealing your thunder, man.
That's okay, Rob. What are you doing today? How have you been, man?
I've been well. How about you?
So it looks like we're going to be doing a little bit of market update today. You have some questions that we're going to be going over in the next little bit here, Rob. So what is happening in the market? I know they have the government shutdown looming. They have some other things going on. What are we working on this week, and what are you working on in the charting sessions?
Yeah, Brandon, it's pretty interesting because I know that a lot of people seem to be, and this happens every single time, right? With these debt ceilings, the government shutdown, et cetera. I always feel like it's just nothing but political theater. Perhaps the government shuts down for a day or two. It has happened in the past. Normally, they come up with some sort of an agreement. The 11th hour, this is an opportunity for especially all the politicians that are up for re-election to have their 5 minutes of fame and try to help their cause. And since we're nearing an election, maybe the Republican, I'm not playing politics, we don't do that, but maybe the Republicans drag this one out a little bit to make the current administration look bad to help their case in the election. I could see that play out. But the bottom line is we're not going to shut down for any decent period of time that would matter. Maybe it's a day or two just to spook everybody. I still feel like there'll be an 11th hour deal. So the bottom line is I think all this stuff is political theater, but it sure gets a lot of chatter on the news stations, the financial networks, et cetera. I really think this has more to do with rates moving to the upside, the dollar staying strong, the Fed pushing the expectation of a rate cut way out to at least next summer. I think all those things matter more, even though the headline stuff is the government shutdown, et cetera. We opened higher today. We had a bounce yesterday. I kind of little surprised at the midday sell-off. So we started basically selling off about 11:30 because it's the end of quarter. Today's the last trading day of the quarter. And oftentimes you get a little bit of a rally into the end of the quarter because institutional traders have a benchmark against the S&P. So they tend to get a little bit of a rally and see.
Been kind of watching all this, and I don't know, Rob, if you've shared your screen or not. Flip your screen back over on your second one. Anyway, when you get that going. But yeah, we've been watching all this, and I might tend to agree with you with the interest rates. That might be the bigger. Obviously, everybody's focused on the interest rates right now, even more so than the government shutdown, and that might be painting the picture more so for the market of what's happening right now. And without answers and without kind of short knowledge of what's going to happen coming up here, I think this is going to be the looming problem in the market. So anyway, I don't know if you got that shared or not, so we can see that screen. Beautiful screen.
I did. I shared it. So are you seeing it or you're not seeing it?
Right on.
Don't see it quite yet.
Well, the sharing button is showing in my little window. So
you flipped your screen over though. Like do the flip thing where it flips the screen on the bottom.
Yeah, I did. Down here. Yep. Toggle screen sharing.
Yeah.
And there it is. Should be there.
No. Let me see what I can do here. Hold on just a second. Maybe reconnect really quickly. I know that this is a little bit of an issue. So maybe reconnect really quickly. We can check that out on both of those here. I know. Oh, yeah, we can see your beautiful face.
Yeah, I can see you. I can't see your screen, though.
So when I flip over to the one to do the screen sharing, you don't see it. So I'll do stop sharing. I'll try it again.
Oh, yeah, that might work. This is interesting, too, Rob. And I don't know if you watch the crypto markets at all, but watching the crypto markets this week has been really interesting as well, because they've taken actually a little bit of an increase as the government shutdown's been looming. And I don't know if that's related at all either, because as they've been talking about this government shutdown and other things, crypto's been going up, man. Bitcoin's been going up. Ethereum's been going up. I think Bitcoin just over 27,000 this last little bit that I saw. Really cool.
Yeah. Yeah. And are you seeing my screen now? Because I was going to bring up a chart of Bitcoin.
No, don't see it.
I think he'll throw it on right when he sees it there.
because it shows up in my little window. Looks like it normally does. There's us, and then there's that. All right, let me try relogging into the screen sharing one, see what happens. Try it again.
All right, it's connected. Now just flip it on over and we're good. Got it.
Perfect. Yeah, let's rock
Right.
on over
Right.
the screen. Oh, dude, you did it. You did it. Don't stress about this. This is good. Perfect.
They're the exact same thing. So anyway, yeah, you're right on Bitcoin, which is interesting because the dollar's been so strong. So why is Bitcoin moving up if it's a fear trade when the dollar is so strong? But we know that we have the halving that's coming up the first quarter next year, and if this is going to follow suit with the normal rally before that occurs, then it needs to get going because it usually happens historically 6 to 9 months before then, and we're in that time frame. So whether or not that's going to create a bid or not, the thing about Bitcoin is you have to be really impressed. I think that we've held 26,000. That's really important. It's held that, and so from here, if we can use that as a base support and take off, that would be pretty impressive. As far as the S&P today, moving into the end of quarter, if we don't get a rally, usually there's position squaring, if nothing else. In other words, the markets move to the downside. We've had this zigzag pattern that we showed to our insiders on our meeting for the Evo Trader subscribers yesterday, and you can see how the zigzag went exactly to 100% extension. We've got a nice pivot point here. Seems like a point that if the market wants to try to make some sort of a rally, we could do that from here. Clearly, we could still go to 161.8% extension. That's always possible. But this is a decent base for a rally. And with the fact that we've had this downward move here, the position squaring would be covering short positions. And I'm not saying that the shorts are going away. I'm not saying the market is done going down. I'm just saying that if we were going to bounce, this would be a logical point. It would be not out of the realm of possibility to bounce up to 440 to test that. It was support for a while, be resistance, fill that gap. But so far, that's not happening. 11:30, the market rolled over. We were higher earlier, and we're not now. And as you know, Brandon, when we do these live shows, what happens at 2 o'clock oftentimes is quite different than where we finish the day at 4 p.m. When we move over to the U.S. market update. So we'll see how the rest of the day plays out. But I'm a little surprised to see the weakness intraday today. So that's really all I wanted to say about the markets. So if we got any questions, happy to take them.
I mean, obviously interesting to watch that. And I know we do have a couple of questions here. The first question that we were going to ask, the first symbol that I think we need to look at is DNA. Oscar wants to know about DNA.
All right. Well, DNA is the physical makeup. No, let's take a look at the chart.
I see what we're trying to do there, Rob. That's
okay. To catch on there.
Thank you. It's been a long day.
So, we're looking at this lower dollar, and when you're dealing with these kind of stocks, so we got a couple things going on. We got a kind of a pink sheet type stock. It isn't. It's on the NYSE, but it's a $2 stock. And so lots of volatility can occur there on top of the fact that it's in the bio world. So a couple of things that create a lot of volatility in stocks, but I would say that if you're looking for something to go long, and I assume that's why the question's being asked, it's at a level of support here at $1.75, trying to bounce up. So we're getting a little bit of a move higher today. If you had some real speculative money, and as we know, you don't want to trade options with money that you can't afford to lose anyway. But in the world of trading in general, when you get to these higher risk type of things, you really want that to be kind of play money type thing. But if you have some extra discretionary income that you're willing to put at risk, I think you could take a shot right here. $1.75 is an area of support. You would have to be willing, I think, to accept some discomfort, if you will, down to $1.50. There's some more support there. And if $1.50 doesn't hold, then there's really a lot of support at $1.25. But with all that said, there is support at $1.75, so you take a shot at it and see what happens. My viewpoint on this is if it breaks $1.75, I'd get out. And if it came down to $1.50, I'd try it again. If it broke that, I'd get out. If it came down to $1.25, then I would really go pretty hard, because that, you can see from March, April, and May was a strong level of support. So you've got some support lower from here. You've got some support right where we are. Not a bad place to take a run at something on a speculative nature. Interesting looking chart.
Yeah, I think you hit all the key things with the pharmaceuticals: high risk, possibly high reward. I remember trading especially the options plays in the pharmaceuticals. Down at those, and I don't know if that's optionable or not. Obviously, some of those pink sheets aren't optionable, but down there in those levels, you're taking, it's a high risk play. So definitely right call, being that it was money that you might be able to risk, that you might be able to lose. The other one that Oscar was asking about was LCID.
Okay. Oh, like? Good old Lucid. I'm checking, yeah. Brandon, it is optionable. So DNA is optionable.
Okay. So there you go.
Yeah, so not too bad there. Let's take a look at LCID. And, I made the comment once before that I like this, the car more than the stock. And so we've had a bit of a move back down. We had come down here, then we had a little bit of a bounce. And the $5 level needs to hold. And for those that may not be familiar, the key levels when you're looking at these kind of stocks is $10 and $5. $5 for institutions to own stocks. They have to be registered as aggressive growth as their investment objective, and then they can own single-digit stocks from $5 up to $10. So when you get up to $10, then anything that's registered as growth can own those. And so oftentimes when you have big institutional ownership, you'll see some people come in and try to support it. That happened back here. It broke all the way down below 10. So you can see there was big support that came in. I would imagine there was some pretty good volume that came in with that. Yep, there you go. So trying to push it back above 10. It held for a while, and then it gave up 10. So they kind of gave up the ghost here a little bit. On the general institutional side, but some of the aggressive people, it looks like maybe they're trying to support it because it has bounced from 5, which is what you would expect. But then when you look at the volume, there's not significant volume. So once again, what you would be betting on here, not so much on the stock or the company right now, I don't think, because that's about as ugly as a chart gets for this year of 2023, is you'd be betting that there's going to be some support that comes in to try to push the stock higher from the institutions. We've gotten a little bit of a bounce, nice doji there at 5, a little bit of a bounce, but this one's a bit risky. I would say that if you wanted to take a shot here long, you're good at this point, but if it breaks 5, you need to bail quick, because likely the institutions will also, and then we'll be dealing with something significantly lower. But perhaps we bounce up to 6, 7, possibly even 8, where the previous wave 4 is. And so we'll see if there's some support. I really feel like some institutions are going to have to come in and do some support here to get any sort of a decent momentum move. And maybe it happens, maybe it doesn't. It's hard to know what they're thinking. But from a technical standpoint, $5 is really key. So if it breaks that, bail quickly.
Yeah, I couldn't agree more. And from a macro standpoint, obviously, Lucid, I mean, if oil goes to $200 a barrel, Lucid might be looking pretty. But still, at the same time, it's high end, more so than like Tesla, than anything else. So I would definitely rather be in Tesla first as that play plays out. And I don't know, at the end of the day, Rob, honestly, I might just stay with my F-250 and push that thing around all day versus move on to the electric. But who knows? Next question we got here, JN. Yeah, no, JN wants to know about ADX. What's that looking like? Bearish direction, it seems like.
What was the symbol?
ADX.
Okay. I'm looking at Tesla here real quick, and then we'll move to that because it's interesting that you brought that up. And I do agree with you. If oil continues higher, and if we are to believe OPEC, which I don't know why we wouldn't, they've made no bones about the fact that they intend to keep a floor under the price of oil, which means that if oil tries to break down, every time it does, they're going to cut production. They're intent on generating as much money as they can with the amount of supply they have left in the ground. And so I do think that there's a lot of EV stocks, maybe even Lucid, could perform well. So I'm totally with you there. But since you mentioned Tesla, I wanted to show this big triangle here. Something significant is getting ready to happen out of Tesla. You can see this. It's a pretty wide mouth of the triangle, and that's what you look at for the potential breakout. So we have the bottom at 220, the top at 300. That's an 80-point move. So Tesla's about to make an 80-point move. You don't know which way it's going to be. There's no way to know that, even though we have a great-looking 5-wave pattern. Wave 4 at 61.8. Tesla's going to make a move, and we'll see which way that ends up. But I just thought I would
Tesla's
tag that
always
on.
been fun.
Yeah.
And sorry, I didn't mean ADX. That was my bad. He actually wanted IWM. He wants to look at the ADX on IWM. So that's my fault.
Okay.
I read that
no
incorrectly.
worries.
So that makes more sense for you.
Yeah, it does. Yep. And the IWM has been slightly different than the rest of the markets where we had these moves lower, but not quite as ugly as we've had here in the IWM. And then you can see today, roll over again. So everything opened higher and then it's sold off. And I am a little surprised at that. So what this is telling me is that we have to be a little nervous. Nervous if you're long the market in the beginning of next week, because unless we mount some sort of a good rally between now and the close, shorts are very comfortable staying short. So they aren't covering their positions. They probably realize that they're not going to get their bonuses anyway because of the performance of the market. So they're not, the ones that are short aren't going to cover the shorts to take the gains. I mean, why would they do that? Well, if they cover the shorts, if they were short, the market moved lower and they made a gain to the downside, then they cover the shorts and book those profits. So if they're content on staying short, that means that we have to at least have some concern on what's going to happen the beginning of next week. So looking at the IWM, which came down and found a bit of support right at the end of its zigzag. You can see the zigzag pattern right there. Clearly a nice looking one. And the ADX didn't quite make it to 40, which is what normally happens. It's kind of rolling over a little bit here. But more importantly, the negative directional indicator is moving lower. So the shorts are getting tired here. Maybe there is a little bit of short covering, just not enough to push the market higher. And then the positive directional indicator is moving up. So there's a little bit of nibbling coming in on the buying side. And the fact that the ADX is starting to roll over a little here makes you want to keep a real close eye on this 175 level. Perhaps we can continue to bounce from here. It would have certainly been more constructive on an upside bounce if we had held and closed above the 10-day moving average. At this point, it doesn't look like that's going to happen. We'll see what happens at the close. But you would think if there was going to be any sort of a bounce, and there doesn't have to be, but if there was going to be any sort of a bounce, see how we came down exactly to the 100% extension on that zigzag there on the IWM. So we're right at the 100% extension. We're at a lot of this area of congestion here. If we're going to bounce, it would be now. The ADX is suggesting that perhaps the selling is a bit tired right now. But gosh, if we break below 175, then 170 was support going back over a year. And then we have the possibility of coming all the way down to the 161.8% extension down at 165. But with all that said, it's got to break 175 first. So if the question is, what is the ADX showing about where we are? It's showing that there is some weakening of this downward move. It's not giving an indication that the move is over, but you have the ADX rolling over, the negative directional indicator moving down, breaking below the ADX, the positive directional indicator moving up. So it's a little bit of a signal that, at least for now, some of the selling is weakening. Maybe we get a bounce. Maybe we go sideways here like we did back in March, April, and May, where the IDM or the IWM didn't seem to want to go anywhere. So anyway, yeah, right where we are is a really interesting level here on the IWM.
Yeah, just looking at that chart there, I mean, I saw Will just type out exactly what I was thinking. If we break 170, it's kind of like watch out below type. I don't know what's going to happen. If we break 170, it goes to 165. Then I don't see any support for over 2 years in that area. So it's like, oh crap. Also, Will has a question.
Well,
SMH.
What is that, Brandon? What is it? If we break 165, what is it?
Well, is that Katie bar the door situation, right? That's what we're looking at.
Sure, yeah. We break.
Okay, I'm learning stuff every day.
Yeah, I mean, I do think there's a decent chance we go to 165 if we don't hold here 175. But yeah, a break below 165, and it's like a lot of really bad stuff going on. Yeah, there's nothing to hold it. It's just there
it is.
Yeah, so
that's it. Right on. So yeah, SMH is the next chart that we're going to be looking at here from Will.
Always good to look at. I mean, it seems like the people asking questions, the viewers, are interested in the signals that give us an appetite for risk, right? So semis, the small caps, trying to figure out what the risk appetite is. And right now, we've got a correction on the way forward that feels a little bit like no man's land to me. So this one's a little tougher. We have the same, almost the exact same DMI here as we had with the IWM. The negative directional indicator moving down, positive moving up, the ADX rolling over. It does feel like that some of this selling is a bit exhausted, at least for the short term. And whether or not 140 holds or not, we'll have to see, because we're bumping our head against the 50-day moving average today. And a break below 140, I think we likely come down and test 130, where there's a ton of support, close this gap here that occurred back in May. So yeah, 140 is the key here. So all these charts that people are looking at have really good areas of support. So if you are looking for speculative type trades where you're taking a shot at something, you've picked a few that are good setups from that standpoint, because if we bounce from here off support, you could get some sort of a decent sized bounce, but the stops are really close. So, you know, if it goes the other way and it breaks these support levels, then you exit. So from a risk to reward standpoint, I really like the charts that people are asking about. And so for wrap up SMH, 140 is the key. You could be a touch more conservative and wait to see if it gets above 150. If it does, then maybe we're off and running a little bit more. Or if you wanted to be super aggressive, you could go ahead and step in now, because even where we're currently trading, we're holding the 10-day moving average. But a break below 140, you got to get out, because 130 is coming quick.
I like that a lot, Rob. Let's go ahead and wrap it up with this last question here from Alexandru. Can we take a look at the QQQ? Wants to know, is that gap considered filled? I know you're a big gap guy. Watch the gaps all the time.
I am a gap guy, and all our AI data, because I always talked about gaps getting filled. So we had programmers say, let's put that to the test and see if it really bears out. And the statistics came back that 94% of gaps get filled. It's not 100, so not every gap gets filled, but that's pretty darn high. The negative is we don't know when. There's no designation as to when. Some gaps get filled very quickly. Some take quite a while to get filled. But the question was, is this one filled? So the low was 364.46. The high today, 362. So the answer is no, the gap has not been filled yet. And we kind of have this wave 4 in a bit of no man's land. With a 28% correction. They usually like to see them somewhat closer to a bigger fib level. It's kind of in between 23.6 and 38.2. That corrective move was too high, so that 80% disqualifies this zigzag, even though it looks like a nice one. I think that's why the software is so important. is because at first blush, that looked like a great zigzag, but the retracement was too much. So that disqualifies it, which makes a bit more sense with the fact that we're hanging in the middle of nowhere. You can see here that in the Qs, the ADX, it never really got super excited about this downward move, which is interesting. I've been amazed, Brandon, at the fact that with interest rates as high as they are, and we're going back, 40, 50 years before we've seen interest rates move at this kind of a rate, and for this kind of an interest rate on 3-month T-bills, for example, it's been a while. So I would have thought that the Qs would have had a much more difficult time. I thought it would really have blasted them out of the water, and it hasn't. A 28% corrective move is really nothing. It's less than any of the other markets. So the Qs have had, in what you would think is the worst environment for them, AI obviously helping out, keeping a little bit of a bid underneath them, but it is pretty impressive. And so if we get past this at all and any sort of calm, and I did do some bond work yesterday, so I'll share this with the folks. I'm also going to do this in the market update, some bond work yesterday that suggests that maybe we're kind of toppy for the short term on interest rates, which means if we do get a little bit of a pullback in rates, that could reignite a move in the Qs. And when you look at the DMI, that never really gave a lot of strength to this downward move in the first place, you could see them take off and run again. So, stocks like NVIDIA and Google and all the ones that have been in the AI space could get a second wind, if you will, and take off again. But the answer to the question, my long-winded answer, is no, the gap's not filled yet. We are kind of stubbornly trying to hang on to that 10-day moving average. We've had a slight bounce in the market over the last couple of minutes we've been talking, but nothing really to speak of. We'll see where it goes later. But yeah, I mean, I don't know how you feel, Brandon, but I'm really surprised that the Qs haven't been beaten up more than they have been. And the DMI is showing you that, yeah, we had a little bit of a downward correction here, but it wasn't anything of significance. We barely got the ADX 220, and it's got to get above that to even trigger. And so we just kind of took a look and like, oh, ho hum, and rolled over. So I think the Qs have been quite impressive to me with their performance in this bit of a downward move. Just to give you reference, we've had a 50% correction in the S&P, only 28% in the Qs. So pretty impressive.
Yeah, seeing that, obviously. So wrote that down, gap not filled yet. Going to be watching that coming up here. Rob, another great show. Obviously, we had some tech difficulties at the beginning. Thank you guys for bearing with us, but everything else was really smooth. Rob, thanks again for coming back to the HUBB channel. We really appreciate it. And hopefully we got most of you guys' questions answered. If you guys have not subscribed to the channel already, go ahead and do so. We appreciate you coming back every week to get this information from Rob and myself. And we will see you guys in the next one. We'll see you guys all later. Take it easy.
All right. Take care, everybody. Thanks. Fun as always. Thanks, Brandon.